Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets have opened mixed as the trade spat starts reflecting on China's manufacturing PMI. Tata Steel seals a 50-50 joint venture with Thyssenkrupp, but will get a smaller share during an IPO in the new entity. The insurance regulator clears LIC's proposal to hold up to 51% in IDBI Bank. The insurer will have to bring its stake down to 15% in 6 to 7 years. And auto sales remained robust in June, with automakers posting double-digit growth last month. Quick check on the international markets, and starting with the US markets. US stocks rallied on the last trading day of the first half of the year, but still posted weekly losses as the underlying market sentiment was soured by anxiety over global trade friction. The gain came after the Federal Reserve allowed 32 of the 35 largest banks in the US to raise their quarterly dividends and buy back more stock. The central bank determined that these institutions are in good enough financial shape to weather a major downturn in the economy. In stocks that stood out, Nike shares jumped more than 11% and reached an all-time high after the company reported quarterly earnings and revenues that beat expectations. All right, let's take a quick check on the Asian markets. The early risers in Asia have opened mixed, or rather with more of a negative bias. The Nikkei in Japan was trading down about 0.3%. It's since then recovered some of those losses to trade more or less flat. And the Australian benchmark has actually gone up in trade. It's now trading up about 0.3%. The third early risers, which is the KOSPI, or the South Korean benchmark, it's trading flat. The Chinese benchmarks have just about opened, and they're indicating that there's going to be a bit of a negative start to the session, but we'll have to wait till the dust settles in those markets to really tell you how the trend is going. For now, Agam Vakil is here to tell you how India is likely to set up for the day, and also what's likely to happen in the futures and options space. Agam, before we start on that, if there was to be a title song for this year's World Cup, it would be Another One Bites the Dust.
That's right. That's absolutely correct, Alex. Well, I'm sure a lot of them out there will be disappointed with the fact that all the favorites are slowly dropping by. We're just waiting on Brazil and see whether or not such a unpleasant surprise for many, as I would say, it turns out for them as well. But it's going to be a wait and watch on that one. That said, when it comes to our own markets, as you can see, we've seen the SGX Nifty, well, let's trade largely flat. We're expecting it to hold around the 10,700 mark. And moving on, let's take a look at how we've seen the Nifty react in the last session. That's Friday. We saw advances for the Nifty, and both the mid-cap and the small-cap indices actually outperformed the Nifty 50 index. In terms of other indices, the Nifty Bank and the Nifty PSU banks both advancing, a lot of strength and to a certain extent short covering coming along in some of these PSU banking names. Well, we do have the Nifty Metal, the Realty, as well as the Nifty Media indices as well trade higher. So we saw strength all around across the markets. And well, in terms of month-to-date performances, we started to see a little bit of change here, but the pharma index up nearly 12%, IT index advancing by around 2.5%, and on the losing end, well, the small cap index now taking over, down by as much as 8.3%. However, this number has shortened, and we are seeing Realty and infra indices also declining on a month-to-date basis. And by month-to-date, it is the month of June. Of course, when it comes to the ADRs, you have Vedanta, Infosys, ICICI Bank and Tata Motors all advancing in trade. And moving in, let's also take a look at Dr. Reddy's, HDFC and Wipro. Well, marginal cuts for some of these stocks. Let's talk about foreign institutional flows, and it was actually some respite because on a net basis we really haven't seen too much of an outgo for FIIs. DIIs of course continue to buy in these markets, a little over 2,200 crores, and that brings the FII month-to-date figure to, well, little over 4,300 crores. That's of course for the month of June. We are into July, and now we'll start seeing new numbers come in. Of course, for the month of June, DIIs was strong, around 14,000 crores worth bought in equity markets. Let's also take a look at how we've seen contributions pan out. And with the strength comes, this time around, from Reliance Industries, HDFC and L&T along with ITC. 4 of the largest weighted stocks have lent strength to the indices, and that's the reason why we saw about 125 points up move for the Nifty. And on the losing end, we don't have too much pressure from HDFC Bank, so not too much to speak for. Now, in terms of futures, as you can see, we're starting to see fresh longs building in, considering a 5.5% increase in OI. And the Nifty Bank futures too, well, we're actually not looking at too much move when it comes to change in the open interest. Let's also take a look at the change in distribution. And this is your open interest distribution. So now what we're seeing is your open interest around 10,600. And this is likely to be defended on the downside. And of course, on the upside, it's the usual 11,000 call that has a maximum open interest, and that will give you the resistance in the near term. In terms of the changes, as one might expect, given we are in a new series, we saw a lot of writing in the 10,600 mark and the 11,000 call. So, and this is largely, something that's expected, considering that we saw the Nifty move up. In terms of your Nifty put call ratio, well, that is, of course, as one might expect, is edged higher at around 1.47 versus 1.43. And for the Nifty banking index, that's up to around 0.83 versus 0.76. And in terms of some stocks that we are watching out for, we have Bata India. That's our fresh longs, 20% added in OI. Among others, we have IDBI Bank, 19% added in OI there. And moving on, we have Hero MotoCorp. That saw some fresh shorts building in, so some weakness coming in with a 15% in open interest. And Lawson and Toubro actually saw a decline in OI, so we're starting to see some short covering there. So we'll be watching out for these. So a lot of stocks to watch out for there, Alex. And of course, the benchmark indices, whether or not they hold on 10,700, that'll be crucial today.
All right. We'll watch out for those numbers and, of course, those stocks that you've just mentioned in the trade setup for the day in India. Let's also take a check on the rupee in the bond market. Saloni Dhanduka is here with all the updates there. Saloni, the rupee has been on a slippery slope. I think there's a lot to talk about in that market.
Good morning, Alex. So the rupee on Friday actually strengthened against the US dollar, snapping its 4-day losing streak against the US dollar. Now, the home currency climbed from its record low of 69.10 levels and ended 0.5% higher at 68.47 levels a dollar on Friday. Now, it was largely supported by a recovery in regional stocks despite rising crude oil prices, trade war tensions between US and China, and a sell-off in yuan. Also, the currency still caps its worst quarter in almost 5 years. Now, it has depreciated close to 5.1% in the first quarter of 2019. Well, speaking of the bond market, sovereign bonds gained on Friday as yield on the 10-year benchmark security dropped nearly 3 basis points to end at 7.90%. Well, in terms of flows into debt market, global funds increased their rupee debt holdings for the 4th consecutive session on Friday. Now, that's according to NSDL data. On the global front, dollar index snapped its 3-day winning streak and ended well below the crucial 95 mark. It ended at 94.50 levels, and it is now trading near the same levels in the early Asian hours. Elsewhere, euro rallied over 1% against the greenback as political uncertainty in Europe eased after European leaders reached a deal for migration and refugee policy. And lastly, speaking of dollar rupee, now it is trading flat in the non-deliverable forward market, indicating a flat opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Now, a couple of you have logged on to our social media platforms, and one of you, Nilesh Prajapati, is asking for a view on aviation stocks. Over the course of the day, we'll get back to you on that one, and we can't give you a trading call on those stocks, but we can tell you that the update in aviation is that aviation turbine fuel prices were cut yesterday sharply by about 2.7%, and that's always positive for these companies because it accounts for a large part of their operational costs. With that, let's shift focus to commodities now, and Jayesh Kilnani is here with all the updates there. Jayesh, we're talking about aviation fuel, also about crude.
That's right, Alex. In fact, if you look at the morning screen, crude oil prices trading nearly 1% lower. But that should not be too concerning or alarming given the fact that last week was very good for crude oil prices. WTI surged more than 8%, and it was the biggest weekly gain that it clocked for itself in over 2 months. Now, also interesting bit is that the Brent WTI spread has in fact narrowed down on the tight supply concerns in the US market. What has also aided the prices on the upward side is the supply outage that we have seen right from Canada to Libya. That has in fact supported both the benchmarks. But as far as base metals are concerned, the index itself posted its third straight weekly decline. Aluminium declined for the second straight day, and we had copper prices which reached a 3-month low. Also, zinc prices were under pressure for the third straight week. We had the likes of nickel, lead and tin, which closed marginally higher. Now, if you look at the Shanghai Futures Exchange, the base metals have in fact started on a weak to negative note. Now, if you look at the precious metal space, COMEX gold has been under pressure for some time now, and it was, it's currently trading down. But if you look at the Friday rates, it closed higher for the first time in last week as well.
All right, thanks so much for that, Jayesh. Now, there are two companies that are going to be debuting on the bourses today. One of them is Fine Organics, which is a chemical manufacturer, and the other one, Rites, is the first IPO from the Indian Railways stables. Somit Sarkar is here to tell you more about those two companies. Somit, starting with Rites.
Yes, I'm starting with Rites. Well, the company had raised close to 460 crore rupees at an issue price of 185. And if you see the demand for this IPO, now the demand was the highest for this IPO, and it was highest in the last 1 year that any government company has seen. Now, the total subscription was close to 67.24 times, with maximum demand coming in from the HNI portion. The HNI portion was subscribed nearly 195 times, while the QIB portion was subscribed 72 times. Retail portion saw a good demand of around 15.7 times. On the listing side, the street is expecting a good listing from this company. A 20% listing gain is what is expected. So let's see how the valuation would stack up on listing. Now, at issue price, the market capitalization was close to 3,700 crore rupees. Price to earnings was 11.4 times. Market cap to sales was 2.9 times, while EV to EBITDA was close to 6 times. Now, if the shares list at 210 rupees, the market capitalization would be close to 4,200. Price to earnings would be 13 times. Market cap to sales would be 3.4 times, while EV to EBITDA would be close to 7.2 times. And if it lists at 220 rupees, then the market capitalization would be close to 4,400 crore rupees. Price to earnings would be 13.6 times. Market cap to sales around 3.5 times, and EV to EBITDA would be close to 7.7 times. Now, the second company that will be listing today is Fine Organics. Now, that company had raised close to 600 crore rupees at an issue price of 783. Now, the demand for this company was a bit subdued as compared to Rites. The total subscription was only 9 times, with most of the demand coming in from the HNI portion, which was subscribed nearly 21 times. The QIB portion and the retail portion saw a subscription of close to 13 times and 1.6 times. Now, compared to Rites, the listing for this company is expected to be a bit subdued. A listing gain of close to 5% is what is expected by the street. So let's see how the valuations would stack up on listing. Now, at the issue price of 783, the market capitalization was close to 2,400 crore rupees. Price to earnings was 23 times. Market cap to sales was 3 times, while EV to EBITDA was 17.1 times. Now, if it lists at 800 rupees, the market capitalization would be close to 2,450. Price to earnings would be 24 times. Market cap to sales 3.2 times, and EV to EBITDA close to 17.6 times. And if it lists at 820 rupees, then the market capitalization would be 2,500 crore rupees. Price to earnings would be 24 times. Market cap to sales 3.2 times, and EV to EBITDA close to 18 times.
All right, thanks so much for that, Somit. Now, the insurance regulator IRDA has agreed to the LIC's proposal to hike its stake to 51% in IDBI Bank and rescue it from a crippling crisis that's been caused by massive rise in bad loans. The permission is subject to the corporation bringing down its holding in the bank to 15% in the future. Bloomberg Quint's Ridhima Saxena has all the details.
The Indian insurance regulator has cleared the way for LIC IDBI Bank deal, but this, as Bloomberg Quint had reported earlier, comes with a caveat. Official sources in the know of the matter told Bloomberg Quint that LIC has not approached the insurance regulator looking for an acquisition, but will be allowed to invest up to 51% in IDBI Bank as a strategic investor. However, LIC will have to submit a roadmap on how it will pare its stake to 15% in the bank eventually. This, as the IRDA investment norms do not allow a life insurer to invest in any company for more than 15%. The time period for reducing LIC's stake could be a minimum of 5 to 7 years, which is what the official sources are telling Bloomberg Quint. This may translate into LIC having no preferential or management rights in the board of the bank, which means that IDBI Bank would essentially remain a board-run entity.
All right, that's the latest when it comes to IDBI Bank and the infusion of capital. Let's move on to another big story. Tata Steel and Thyssenkrupp have sealed the European joint venture on Saturday, creating the second largest steel conglomerate in Europe. While the two sides have managed to tide over all the reservations surrounding the deal, forming a 50-50 JV, there are some details in the fine print that shows that Thyssenkrupp will eventually have an upper hand in the deal. Nikki Mirchandani is here to take you through all of those fine print details. Nikki, morning.
Hi Alex, basic counters of the deal, well 50-50 JV will be named as Tata's Thyssenkrupp Tata Steel BV. Tata Steel will transfer external debt of around euro 2.5 billion, while Thyssenkrupp will transfer a rough debt around 4 billion euros, including 3.6 billion of pension liabilities. The identified synergies between the joint venture would be in the range of around 400 to 500 million. Also, the full synergy realization benefits is expected to creep in a span of next 2 to 3 years after the formation of JV. Significantly, the additional value for both these companies would be in the range of around 5 billion euros. And Tata Steel and Thyssenkrupp combined will have to hold at least 50% stake in the JV for at least 6 years. Alex, how different the deal will be from the previously announced one? Well, to begin with, there will be a reduced economic interest that we see at IPO, given that Thyssenkrupp's stake in JV at the time of IPO can increase to 55% from 50% currently. This is mainly on account of allotment of warrants which can be convertible into equity, which can be exercised at the time of IPO. Thyssenkrupp will also have a say at deciding the timing of IPO. We also have the management, we also have Thyssenkrupp website, which the press release which cited that different performance development of Thyssenkrupp Steel Europe and Tata Steel Europe have led to a valuation gap between the two entities, and to capture this valuation gap we are seeing the added economic interest to Thyssenkrupp at the time of the formation of IPO. Secondly, we have lower synergies. We're noticing lower synergies as much as 100 million euros less from the higher guidance. Earlier, the management had guided for a synergy benefit in the range of 400 to 600 million, and now it's come down to 400 to 500. And also, we are seeing some kind of ambiguity in terms of the timeline structure, because earlier the management had guided, and they still have maintained the guidance of December 2018 for formation of JV. But then back in the con call, they have said that they expect the JV to be, only the regulatory approvals to be in advanced stage by December 2018.
All right, thanks so much for that, Nikki. We'll stay with that story over the course of the day. Some of you who've joined in on social media are saying hi. Thanks so much for joining in. Tanya, Vinay, thanks for saying hi. The rest of you can as well. Let's move on to another story. Most automakers had a good June. Monthly sales have grown in double digits. Yash Upadhyay is here to take you through the numbers that have come so far. Yash, what are we looking at?
So Royal Enfield is the lone two-wheeler on our list to have announced their June numbers. Now they have clocked in sales of about 74,500 units, which is a strong 18% growth on a year-on-year basis, but slightly below our estimate of about 75,500. Now what's working for them is the premium end 350cc and higher engine bikes, which reported a strong 29% growth, along with a healthy uptick in their export market as well. As far as the four-wheelers are concerned, Maruti Suzuki reported a strong 36% jump in its volumes. Now they did close to 1.5 lakh units, which is significantly higher than an estimate of about 1.3 lakh units. Now this strong outperformance that has been led primarily by a healthy demand in its compact vehicle segment, which includes the like of Swift, Desire, Baleno, among others. So we should possibly see a good positive reaction to the stock today. As far as M&M Auto is concerned, that too reported a good 26% jump in its volumes, doing sales about 45,000 units, which is in line with our estimate. 3%. Now their domestic passenger vehicle business, that had an okay month, nothing to write home about, but their commercial vehicles business and exports, they had a bumper month wherein their exports grew by a strong 87%. And finally, we are also looking at Tata Motors. They had another good month. Now they have done sales of about 57,000 units, which is a strong 54% growth on a month-on-month basis. And this time around, it's not just the commercial vehicles business, but also the passenger vehicle business, which has done well, reporting a growth of about 63%.
All right. Yash, there are also a few companies that are going to be reporting their numbers today. What are we looking at? What are the expectations?
Right. So first up, we have Ashok Leyland. There we are expecting sales about 14,000 units, which is a 13.5% growth on a year-on-year basis. Similarly, when it comes to Hero Motor, we are expecting a strong 12% growth, and for TVS Motors as well. So a good double-digit growth for TVS Motor and Hero Motors. While for Bajaj Auto, we are expecting a big 59% growth on account of that low base, along with good demand in the three-wheelers and export markets. And lastly, for M&M Tractors business, we are expecting a 9% uptick with number anywhere in the range of 35 to 36,000.
All right, thanks so much for that, Yash. We'll stick with those numbers over the course of the day and bring you updates as and when we get them. For now, those are stocks clearly that you have to watch out for and trade today, but there are also several in the news, stocks in the news. Shraddha Babla is here with an entire list to tell you about. Morning, Shraddha.
Morning, Alex. So first up, we have Aditya Birla Fashion and Retail, which will be in focus, and this is on the back of an ET report which says that Aditya Birla Retail has signed an agreement with PE fund Samara Capital to sell its food and grocery retail chain. That is for an enterprise value of 4,300 crores, so watch out for that one. You also watch out for Moil Limited. This is on the back of various price revisions that the company has undertaken. You also have Adani Group companies like Adani Ports and SEZ and Adani Transmission, which will be in focus on the back of Adani Group's plans to raise about 6,000 crores via securities and stake sale in various subsidiaries. The proceeds, of course, they've said, will be used to deleverage the power business and part fund the takeover of the Bombay power transmission distribution business. So again, you will have Adani Power in focus as well. You also have aviation companies which could see some positive reaction today. Now, ATF fuel prices have been cut by 2.7%. This is the first price cut that we've seen in the last 12 months. So you could see some positive development for the likes of Interglobe Aviation, SpiceJet and Jet Airways. You also have Bosch, which has said that the parent company has plans to sell $1.5 billion worth packaging machines division. So let's see how that one reacts today. You have Thermax, which has won an order worth 340 crores. Not a very big one, but you can see some marginal reaction there as well. In bulk deals, again, you have Adani Ports, where Kamas Investments has bought 1.3% stake and SB Adani Family Trust has sold 1.3% stake. And finally, you also have Minda Corp, where Vasarch International Opportunities Fund has bought 0.9% stake. The seller is KR Handloom. They've sold about 1.3% stake. So a lot of these names possibly are likely to react, Alex.
All right, thanks so much for that, Shraddha. Now, here's an update on something that one of our viewers, Nilesh Pradapati, was actually asking about, bringing of petrol and diesel under the ambit of the goods and services tax. Now, the word is that it won't reduce the prices if the tax rates are kept revenue neutral and the governments don't sacrifice revenue. That's the word coming in from the Finance and Revenue Secretary, Hasmukh Adia. Speaking to Bloomberg Quint's Nikunj Ori, he said that we must de-link crude oil prices from the increase in or crude oil price increase from GST, and GST isn't necessarily the solution to do that. Listen in.
Now, first of all, let's understand that we must de-link the crude oil price increase with GST. GST is not necessarily the solution to that. If petrol and diesel is brought into GST and if the rate is neutral, in which there is no sacrifice of central and state government, then the final prices of petrol and diesel is not going to change. That is the thing. So the two are completely independent and we don't have to mix up the two.
Okay. So recently the Bihar Deputy Chief Minister has also said that one of the ways could be that petrol and diesel will be taxed at 28% and the states would be given power to levy additional duties on that. So can that be expected and can that be a possible solution when it comes to
is there a real benefit to anybody out of this proposal? So, but these are some of the options which can be discussed when the council desires to include petrol and diesel. So at that time, the council can decide all these options. how to tax petrol and in what form, that council can decide. But the question is ki right now there are two taxes, VAT and excise. Now you are saying ki add a third one. Now third one adding means what? The input tax credit will be available to manufacturers so there will be no cascading for them, and to that action there will be a revenue loss.
All right, lots to talk about over the course of the day, and you'll find all of that right here on Bloomberg Quint Live. There are also several stories on the website, bloombergquint.com. First up, in pharma, Dr. Reddy's Laboratories is recalling over 2.36 lakh bottles of atorvastatin calcium tablets used for lowering cholesterol from the US. And that's according to a report by the US health regulator. The complaint was received for a defective tablet with an embedded foreign object that was observed in a bottle, the US FDA said in a report. And what a World Cup it's turning out to be already. So many upsets, and then in the knockout round that took place over the weekend, first Messi's Argentina and then Ronaldo's Portugal have to fly back home. Then home side Russia beat 2010 champions Spain in a penalty shootout, and then in late night drama yesterday, Croatia beat Denmark in another penalty shootout to book their place in the quarterfinals. One thing's for sure, it may not be such a bad idea to back a dark horse in this competition. Ritvik Sharma is asking me on YouTube who I am supporting and who I was supporting early on. I've always been completely neutral, Ritvik, and I know what they say about the hottest place in hell being reserved for those who sit on the fence, but all the same. That's a wrap on this edition of Daybreak. All you need to know is up next, so do stay tuned. This is Bloomberg Quint.